Hello and welcome to the launch of the equity release referral service from Knight Frank Finance for TMA members. My name is David Forsdyke. I run the Later Life Finance team here at Knight Frank Finance, and I'll be taking you through the launch today. The plan today is just to give you a very brief overview of who we are and what we can do for you and how we might be able to help. But before I do that, I just need to do a little bit of housekeeping with you. Now, on the screen in front of you, you'll see a few different boxes. The first box is called the speaker bio box. That tells you a little bit about me, my background. I will cover that in one of the slides in a moment. You'll also see that there is a get in touch box at the bottom of the screen. That will generate an email that will come through to me. So if in the course of today's webinar you've got any questions, you've got an opportunity to email me there. You'll also see that there is a Q&A box. Now, this webinar has been pre-recorded, so any questions that you raise in that box won't come through live during the webinar, but I will receive them, and my promise to you is that I will respond to any questions. You've also got a resources box on the screen, and in there you'll see there's 3 short guides. These are guides that we've already prepared, and you're very welcome to use those with your clients going forward. So please do take the opportunity to download those and use them as you wish. You've got my contact details in the bio box, I believe, but I will also be repeating my contact details right at the end of the webinar today. And the good news is, because this is being recorded, you'll be able to come back and review and replay this webinar at any time. So let's get into this. Now, just to start by telling you a little bit about the service that we are launching for TMA members. Knight Frank Finance have been members of TMA for many years, and we're really excited to be able to offer this service to the broader TMA family. What we want to be able to do is provide a personal and professional relationship for you to look after the equity release inquiries that you might receive. As you'd expect from Knight Frank, we are known for the quality of the service that we provide for our clients, and we want to bring that same quality of service to you and your clients. And of course, there is something in it for you. We do pay referral fees on completion of the transactions that we do. Last year, our average referral fee from our existing introducers was in excess of £2,000 per case. So do take the opportunity to refer any equity release inquiries to us, and we will make it worth your while. So I'm going to start by telling you a little bit about myself, a bit of background. I used to work for the FCA, and I became known as a subject matter expert on equity release while I was there. That led me into a role as head of compliance with Canada Life. And at the same time, I was invited to sit on the standards board of the Equity Release Council, which I did for a couple of years. I then joined what they call their advisory panel, and at the moment I am sitting on their risk committee. So one would hope I know what I'm talking about when it comes to equity release, and hopefully I can tackle any questions, any queries that you might have. Let me give you a bit of a taste of what my clients say about me. There's a couple of quotes have come up on screen from recent client testimonials. I run a small team of advisors here at Knight Frank. We are called the Later Life Finance team, and I like to keep my hand in, as it were, and give advice myself as well as running the team. I think it's really important to understand what's going on at the coalface. So that's what my clients are saying about me. Let's go on then to talk about the equity release service that we're providing for you. Why have Knight Frank Finance stepped into this market? Well, we saw the opportunity a couple of years ago, really, that equity release and later life borrowing in general was an expanding market, but it is a complex market. It's a market that you need to understand. You need to have some good background knowledge of in order to give people the very best advice. Now, we know that TMA members, we've got mortgage specialists, we've got brokers of all sorts, and we felt that we could help support TMA members with an equity release referral service so that we can bring you the expertise that you need for your clients. I'm going to start though with a bit of a myth buster. A lot of people, when they hear the words equity release, have a sharp intake of breath, and it's understandable. There's been some very poor value products in the past. The good news is modern equity release is much better value for money, much better protected through the regulator and through the council. So let's address some of those potential objections before we go too much further. We hear this a lot. A lot of people think that equity release is a bit dodgy. The good news is that the FCA have regulated equity release since 2004. I was part of the team that worked on the mortgage market review. I'm sure many of you will remember that, a new set of rules that came into effect in 2014. And my job then was to make sure that those rules carry across to equity release. So the whole basis of those rules are to protect consumers. We've also got a set of standards from the Equity Release Council, and a majority of advisors and all of the current providers in the market are members of the council and have signed up to those standards. So it's no longer a dodgy market. It's actually very well protected and very consumer focused. Another thing we hear quite a lot is that it's expensive. It used to be. In fact, when I entered this market back in 2005, I was dealing with interest rates around 7 and 8%. The good news is nowadays we're seeing rates starting as low as 2.28%. And for Knight Frank finance customers, lifetime mortgage customers, we were securing rates around 3.18% on average last year. A lot of people worry that with equity release, there's not going to be anything left for their family, for their children when they pass away. With interest rates so low at the moment, lifetime mortgages with interest rolling up, the debt is likely to double in about 25 years or more. So it's likely that there will be equity left in the property at the end of someone's life. It's a much safer bet from that point of view than it ever has been before. And this is something else we hear. A lot of people worry that they're going to lose control of their home, or they won't own their home anymore. They have to give up their home. Well, with a lifetime mortgage, which, as we know, is the most common form of equity release these days, you are still the owner of your home. The title is still in your name. You can still do things to your property if you wish, make adjustments as you would under any other form of mortgage borrowing. Finally, a lot of people worry that they're going to be stuck in their current property forever, that lifetime mortgage is not very flexible. The good news is that products are far more flexible than we've ever seen before. As a borrower, you can move home, you can move the mortgage with you, you can make interest payments if you wish, you can use a drawdown facility, which is very common these days, you can make overpayments, and you can even go back to the lender for further advances if you want to increase your borrowing. So there's a huge amount of flexibility. You're not tied down to living in one property for the rest of your life. So let's talk about how equity release can help your clients and the sort of things that you might want to refer across to me. One of the things that we're seeing a lot of at the moment are families who want to support younger generations. The Bank of Mum and Dad was a great report from Legal & General that was published last year, and it showed a huge number of people seeking help from their parents or their grandparents in terms of securing a cheaper mortgage. We've seen a few examples recently where grandparents have been able to make the difference between an 85% mortgage and an 80% mortgage. And those of you familiar with the mortgage market at the moment will know that that jump from 85% down to 80% could save your customers around 0.3, 0.4% on their interest rate. I was looking a little bit earlier today at 5-year fixed rates, and I saw one lender offering just above 2% fixed over 5 years at 85%. The same lender offering something around 1.7% over 5 years if you were borrowing just 80%. So grandparents can help their grandchildren get that extra 5% by using equity release. And an idea we've been putting forwards is that the children, once they've borrowed that money from grandparents, can pay the interest for them. Lifetime mortgages will allow the interest to be serviced, and that can often work out much cheaper than trying to borrow a larger 85% mortgage. So there's one idea that you might come across. Another thing that we see a lot of is people using their property to top up their income. A client of mine quite recently had a pension scheme that he'd been drawing down from for many years. He was making use of the modern systems and drawing down from his pension rather than crystallizing the pension into an annuity. He'd reached the age of 83, and unfortunately the pension fund was starting to run a little bit dry. But he owned a cottage out in Hampshire worth around £1.5 million. And he's used the equity in that property to top up his income. What we've done for him is set up a lifetime mortgage on a drawdown basis, and he can draw small amounts from it as he goes along. As and when he needs those funds, he can draw them down and effectively use it as income. It's important to note, though, that if you do structure a lifetime mortgage that way, it isn't actually income, it is borrowing, so it's not taxable as income. Another thing that we get involved in a lot is inheritance tax and estate planning. And as I'm sure you know, the inheritance tax is one of those taxes which is very avoidable if you plan ahead and you're very careful in the way that you set up your estate. Obviously, a lifetime mortgage can help with that by raising a debt against the estate. I had a client recently in the Beaconsfield area who had a property worth well over £1 million, which meant that on his death, his nil rate band would be exhausted and his beneficiaries would be faced with an inheritance tax bill. What we've been able to do for him is raise a debt against that property by using a lifetime mortgage. It's allowed him to make some gifts to his sons and also his grandsons, which they're very pleased to receive. In fact, my client was particularly keen to help out his grandsons, 4 of which are going through university at the moment. So Grandad is very popular amongst the grandchildren at the moment. But by raising that debt against his estate, we have cut down the potential inheritance tax bill that his sons will be faced with by quite a considerable amount. And if that debt rolls up over the next few years, it could actually get rid of the inheritance tax bill altogether. And a final thought for you is around buy-to-let mortgages. There is an over 55 buy-to-let mortgage out there which is structured the same way as a lifetime mortgage. And we've seen a lot of clients using this to restructure their existing buy-to-let mortgages. By doing so, they're able to increase the rental income that they're receiving from their property. They're no longer having to service the interest on their borrowing. And another idea for you, by using this lifetime mortgage structure to perhaps top up their purchasing power, it allows retirees to buy larger property for letting out. And by buying a larger property, you're going to generate more rental income. So it's really an idea that's just starting to take off, and I'd be interested to hear from you if you've got some thoughts on that. So How do Knight Frank Finance intend to support you? Well, the first thing I need to say here is that my team, the Later Life Finance team, we are only providing an equity release service to TMA members. If you refer a client to us and a more regular mortgage is a better solution for the client that we talk to, we will refer those clients straight back to you. I think that's really important. We are only dealing with equity release. Secondly, we are keen to develop a personal relationship with you. I am keen to develop a personal relationship with you. So what I want to do is make sure that you're able to refer directly to me. Pick up the phone, drop me an email. I'm very happy to have a chat with you. I want to make it as easy as I possibly can for you to refer clients to me. So if you're sitting in front of a client and you think it looks or feels a bit like equity release, please do pick up the phone. Let's have a conversation about it and see what we can do for that client. I'm planning a series of webinars in the autumn, which will start to explore some of the themes I've raised today in a little bit more detail. You'll get details of those webinars when they come along. Please do sign up and join us for those. And we've also got the opportunity to develop some client-facing material for you. So if you think there's something that might help in terms of your communication with clients, just to let them know about equity release, perhaps a mail shot, some form of marketing, we'd love to support you with that. So do tell me what you need or what you would like to have a go at, and we will try and add things to our suite of materials for you. So just to finish off, here's my contact details, and don't worry, these aren't going to disappear. We have a website page on the TMA site where you can contact us, but do please pick up the phone to me or drop me an email if you've got any questions. I'm really looking forward to working with you and with TMA and taking this relationship forwards. I look forward to hearing from you soon. Thank you very much.